Oddly enough, the penalties for not filing a tax return are far worse than the penalties for not paying in the balance due.
Austin Rice, an accountant for Berkey, Cox, Evans, and Bradford accounting firm, explains that the penalty for failing to file on time is 5% of the total unpaid tax liability, which compounds per month. Each month, it's late.
So after just 2 months of it being late, that could be a penalty of 10% of your unpaid balance. So if you owed $10,000, then by holding off for 2 months on paying your balance due, you're out another $1,000.
But filing an extension waives that penalty. Even if you do not pay a cent of your taxes due, by having that extension filed, the penalty is now 0.5% of the balance due.
Half of 1% compared to 5% is a pretty big difference.
The deadline for the extension is the same as the deadline for taxes, April 15th at midnight. The application for the extension can be found easily online at irs.gov and is called Form 4868. Once you have the extension form, fill in your identification information and then your estimated total of tax liability. To figure out your tax liability, you need Form 1040, which is a table of possible annual salaries. The columns next to it show the estimated tax liability with options based on marital status. File the extension, avoid the steep 5% penalty, and give yourself an additional 6 months to figure out your tax situation.
Keep in mind what your own personal tax situation is and how complex it is. If you itemize deductions, particularly if you're self-employed or you own a business, I would say in that case, pay in an estimate of what you owe. Take the time to actually gather your documents, compile your records so that you can, when you actually file the return, make sure that you get the return correct.
The more complex your itemized deductions can mean the more easily parts can be overlooked. That's when you may wish to see a tax professional who can help you make the most out of your taxes. If you'd like to avoid the headache next year, Austin highly suggests starting now in preparation.
It's great if you can hang on to all your documents throughout the year that you even think will be related to your tax return.
He says, if anything, shove every document, receipt, and tracking of vehicle mileage into a box or envelope and have it ready for the start of next year. For Time Warner Cable News, I'm Cody Urban.